handle. Obviously, there's no shortage of things for us to worry about when it comes to our currency. Chief among them, global trade tensions. Obviously stirring a lot of concern about how hard this economy could be hit if the Americans pull out of NAFTA, if they bring in tariffs on our autos, and that's not even talking about the two big players globally, China and the United States. There's the ride that our currency has had in the past year. It has been up, and it's right back down to where it was this time last year. And that's changing a lot of the bets, actually, as to what the Bank of Canada is going to do at its next hike decision. Will it go higher? The market was pretty confident a little while ago, not as confident as it had been. Joining us now to help us make sense of it all, Adam Button, Chief Currency Analyst at Forex Live. Good to see you, Adam.
So good to be here.
All right, so let's start where we are right now. We're seeing a little bit of strength come back into the loonie right now, but that's still, the 4-tick bounce still leaves us where we were last year at this time. We're at a one-year low.
Yeah, it's been a ride for the Canadian dollar. I mean, you remember this time last year, the Canadian dollar took off as the Bank of Canada started to hike interest rates, and now it's come all the way back down. Now, a big part of that is the U.S. economy is doing a bit better. They had tax break, they're hiking rates. But lately, it's been more about trade for the Canadian dollar. And, you know, we're really in a tough spot right now. As we get to the end of the month, that's when Canada will put tariffs back on the U.S. And I think we're left with a little bit of a window here where we could have the U.S. maybe step down and save the day and ratchet down tensions.
Now that is obviously, that's the cooler heads prevail scenario, right? That Donald Trump comes out, he comes out loud, he comes out brash, he loves chaos, generate chaos. This is his entire strategy, and where we end up is somewhere that's everybody can live with. That's the hope, I think, that people have.
Well, the feeling right now is that it's getting worse, right? And everybody's right to feel that way. It certainly seems like it's getting worse. But just yesterday, we had Commerce Secretary Ross talk about, okay, Canada isn't a national security risk, which was a ridiculous idea, but he said it. And, you know, if you look at the last two deals Trump's made, just immigration this week, he was all bluster, and then 2 days later, he backed down and changed his mind.
He did exactly what he said he could not do.
And if you look at North Korea, you know, it sounded like we were going to nuclear war. And then a few months later, they're laughing and hugging. So he's not against making a U-turn. And this is really the ideal time to do it. Because if he waits after till after Canadian tariffs, then it looks like he's sort of backing down. Now he can get ahead of it and make a move. That said, will it happen? I don't know. And I think the Canadian dollar swings 2 or 3 cents either way, depending how it goes at the end of this month.
With the volatility that comes out of the Trump administration, I'm trying to imagine what the meetings look like at the Bank of Canada. All these sober central bankers trying to make sense of it all and really try to formulate some monetary policy. I'm looking right now for the July 11th meeting. Right now, the market's pricing in a 65% chance that we're going to get that rate hike out of the bank. But just a week ago, it was a 77% chance. So the bets are coming off. Obviously, they still think, the amount of money is weighing on the fact that they will, but how much caution does the bank have to proceed with?
If you remember the last Bank of Canada meeting, that's when they signaled a hike, and it came the day before the U.S. imposed tariffs. And I think that caught the Bank of Canada by surprise. It certainly caught the government by surprise. So they would have been a little bit worried about that. But I don't think they sit around in the meeting and talk about what Trump's going to do, because it's like me and you talking, nobody's really sure. So they're going to look at the Canadian economic data. Tomorrow we have CPI and retail sales. So that's inflation and a look at the consumer. And this is the last look at those two key categories before the Bank of Canada decision. Now, April, as everyone remembers, was a terrible month in terms of weather in Canada. So we might get a bit of softness there. And then you've got the market in a real tough spot in terms of judging what the Bank of Canada is going to do. And the Canadian dollar is already on its knees right now. So it could be a tough rest of the week, not to mention OPEC.
Okay, I'm going to get to OPEC in a second, but I'm looking right now at what the street is thinking we're going to get from the inflation report for May, and they think that headline number, this is what the economists are thinking, is going to be 2.6%. Talk about being far beyond the sweet spot of 2, but obviously the Bank of Canada has a certain way of, I guess, talking down a hot number if that's what they want to do.
Yeah, we've known this is coming for a while because we had oil prices down and they've been rising over the past year. So there's this global inflation that's going everywhere from commodity prices, and that we're near the high water mark of that, but we still can get a little bit higher in May and June. I think the Bank of Canada is going to try to factor that in. At the same time, they want to hike rates so they can cut rates later. They feel that rates can go up a little bit, so they have this window to do it now before inflation starts moving back down. And I think they're still leaning a lot harder towards hiking than that 65% shows.
Yeah, that would seem to be the tight spot that they're in the sense that if all the trade relationships fell apart and there was just no deal to be had, and that's not what we're hoping happens. But if that's what happened, how much dry powder do they have with the overnight rate where it is right now? They weren't able to get it back up to a good level where they could start trying to save our butts again if we need saving.
Exactly, and they saw last time the Canadian dollar went down a lot, that didn't help them out that much either. So if they're expecting it through the currency side, it didn't really materialize the way Paulos thought it would 2 or 3 years ago as oil was crashing. So they want to get themselves into a more comfortable spot, ratchet rates up a little bit higher, but we're going to need to see strong data and we're going to need to see some stability in commodities.
And of course, we're going to get the OPEC, the upshot from the Vienna meetings, and then I guess we're having a clearer picture as to what's going to happen there. Because basically, what it seems to be going right now behind the scenes, certain countries feeling the need to perhaps keep those production curbs in place, keep the price of oil a little bit higher, and then other countries saying, let's ratchet it up, open the spigots. So I guess it's going to be a matter who wins that fight.
It's, the OPEC meets twice a year, and it's one of the most exciting times for an oil trader or a Canadian dollar trader because there's headlines coming every hour. Every minister sort of weighs in. There's repeated leaks about how much they're going to hike production this time. Yesterday, we were talking 6, 8, maybe 1 million barrels per day. Today, there's talk of 2 million barrels per day, and then talk of it not happening at all. And the way the market really deals with it, by and large, is just waiting and seeing. There's so many leaks, there's so much misinformation coming out of OPEC that once they move, then you get the big moves in oil, and the Canadian dollar is going to be dragged around with that. So tomorrow, OPEC, Canadian retail sales, and CPI, it's shaping up to be a massive end to the week for the loonie.
Now, in the low 75 handle, do you have a call for the currency in the next couple of months or maybe even a year out?
Yeah, it's not looking good in the near term, and this momentum will take it farther. The U.S. dollar is benefiting. It's not just a Canadian dollar story. I mean, the American dollar is beating up on other currencies even worse, and there are flows coming out of emerging markets, and I think that trend is going to continue. The Fed is so comfortable in hiking that we're going to get down to the 72 cents, I think, in fairly short order, and probably below that towards the end of the year as the Bank of Canada heads to the sidelines and the Fed continues to hike.
All right, Adam, always a pleasure to have you here and getting your insight.